Thanks everyone for joining us tonight. My name is Brittany Piquel with Next Generation, and we have a special guest here with us, Bart Bosson from SGR Energy. He's going to be talking to you guys a little bit about some different options for using IRAs or personal funds as well to invest into energy and other types of private equity projects. So I know you're used to hearing my voice usually at the beginning of these, but we're going to have Bart start us off tonight, and then I will talk about the self-directed IRA side of things for anyone who might not already be familiar with what they are and how they work. So just a few quick items to note. We will be recording this webinar, so if you have to hop off or for whatever reason you registered but couldn't make it on tonight, everyone will receive a copy of the recording. And we are going to save questions for the end, but feel free to enter them into the chat box on the right side of your panel, and we'll field those after we get through this. So as you know, Bart's going to be talking about energy sector investments, private equity deals in general, dividend-based income, and then I'm going to talk about basics of self-directed IRAs, how they work, what are some of the IRS regulations surrounding them, as well as then how you can utilize self-directed IRA for private placement into some of these investment types we're going to talk about tonight. So with that, welcome Bart. Thank you for coming on tonight and sharing your time with us, and I'll let you jump into it.
Great. Thanks, Brittany. I appreciate the time and love working with you and doing this. This has been great. As Brittany said, my name is Bart Bosson. I'm with Investor Relations Department at SGR Energy here in Houston, Texas. And tonight I'll be providing you some information about alternative investment opportunities, specializing in the energy sector. Since my company is a heavy fuels market, most of the examples, well, probably all the examples I'm going to be using will be based on this segment. So I'll be discussing an investment opportunity that we are providing to our shareholders and explaining how y'all can take advantage of this opportunity, currently paying a 12% dividend, same way many others have over the past couple of years. So we are downstream, but there are other energy opportunities as well, upstream, which is basically exploration and drilling, and then there's solar and wind opportunities as well that you can invest in. If anybody's interested in some upstream drilling stuff, send me something later, and I got some companies that would be love to hear from you. But anyway, as most of you know, these presentations are, get my page right here. There we go. My computer's not working. But anyway, this is a forward-looking information. So as with any investment that you guys do, make sure you do the diligence on the company and the opportunity. So because you're the one that's in charge of your money. So this is a blast. There we go. Okay. So in any business situation, there needs to be a reason why you are entering the playing field. And in our case, our CEO decided to use his 20 plus years of business experience to continue what his mentor had taught him before his passing. And since the company was formed about 7 years ago, our why is because we can make a better fuel using alternative blend stocks, alternative products that are readily available, we can source easily and cost a whole lot less than what other companies are using right now. Some of you probably remember way back in the 70s and 80s, the regulators moved from leaded fuel to unleaded fuel, or from leaded to unleaded. And then in the 90s, they moved from regular diesel to low sulfur diesel. And then in the 2000s, they moved to ultra low sulfur diesel. So now they're continuing on to the next fuel line, and that's the heavy fuel. And in 2020, International Marine Organization, which is part of the United Nations, is going to regulate that shipping, and everybody in the shipping industry is going to have to move from 3.5% sulfur content currently to the 0.5% sulfur that will take effect January 1st of next year. Excuse me. And since fuel is the biggest expense of a ship owner, they're going to have to figure out, are they going to use strippers on their ship to clean fuel and take all the sulfur out of it before they use it, or are they going to move to more expensive fuel more alternative fuels, they're going to cost them more money. And long story short, it's going to cost everybody more money because prices are going to go up. So, excuse me. Basically, what we've done is we've made a low sulfur, cleaner burning heavy fuel that's going to meet the needs of the world's industrial burners, and it's going to be cost effective to them. Like I mentioned earlier, we found a way to use cheaper alternative blending agents that are going to lower the sulfur content and improve the quality. And we feel that our blending platform is going to be a leading way to stop massive increases in the shipping prices. I said, everything comes in from China, so shipping prices are going to go up if this can't be stopped. So traditional oil barrels are typically a blend of residual fuel, which is a byproduct of the refining process, and as long as they're refining oil, there's going to be this fuel left over. So they start with residual fuel and then add diesel fuel. And with current and future investment or environmental models, low sulfur diesel is going to be more in demand, so the price is going to go up, which again, it's only going to get worse. So in our barrels, what our investors like is we use less residual fuel, we use less sulfur, less distillates and diesel, and more of our blend stocks. So we're creating a better fuel that uses less of the high cost products. And when we finish, our products burn cleaner. They can be delivered at a cost savings to our customers and still leave a good space for us to make a profit. So what are heavy fuels? Heavy fuels are often referred to as six oil, and they literally come from the bottom of the barrel. Some call it sludge, but don't say that around our boss. And when a barrel of oil goes through the refinery, what it processes is the gasoline and the diesel and the jet fuel and the asphalt and all the lubricants and everything else that they take out of there. And what's left is a thick molasses type material that's known as six oil or residual fuel. We take this, blend it with middle distillates and maybe some petrochemicals, and in our case, our proprietary blend stocks, and sell that to our clients. Depending on the specifications, we can blend it to 17 different specifications. And right now, global refineries are producing about 9 million barrels of this product every day, again, as a byproduct of the refining process, which makes up about 11 to 12% of the world's crude oil production. Excuse me, and about 45% of that's traded on the open market. And eventually, refineries are going to make better machinery, and they're going to have better engineering to get more out of each barrel of oil. So this is going to reduce our supply. Also, emerging markets are going to increase the demand for electricity, so more fuel is going to be used around the world, and this product will, again, there'll be less of it. And eventually, people are going to want cleaner fuels around the world. They're going to demand cleaner fuels, so this could take part of it away too. So right now, the heavy fuel industry is highly profitable and trades about 5 billion barrels. Trades about 5 billion barrels per year. At today's price, it puts the market at about $250 billion because oil is about $50 a barrel today. So the markets for heavy fuel can be broken down into bunker fuel, which is the gasoline of the oceans, utility fuel for power generation, which makes electricity, industrial fuel for heavy machinery companies like paper mills and the like, and then refinery feedstock in some markets where they'll actually put this in with other oil and re-refine it. Since SGR is focusing on power generation to grow our company, because that's where we can maximize profits on every trade. And we'll be expanding into the bunker market probably in the next few months as soon as we can scale our business to trade the volumes necessary to be profitable in the markets we need to be profitable in. So the International Marine Organization, like I spoke of earlier, in 2020, they're going to make their fuels less sulfur. And in the past, the marine fuel and the Gulf Coast high sulfur fuel oil, which will be HSFO, have roughly followed in the same pattern. Due to the IMO regulations, which will most likely change the marine fuels industry prices, experts are expecting the two patterns to split. The high sulfur fuel oil will drop in price, which makes our fuel less expensive. The marine fuels are expected to go up in price. So this is going to allow other high sulfur fuel owners of HSFO users to get a cheaper fuel also. So our business should benefit greatly because of this this change that they're making. According to the EIA, which is the International Energy Agency, about 26% of the world's population currently has electricity on demand. So imagine you have a cell phone, which most of us do, but every time you charge that cell phone, you have to walk 3 or 4 miles to go to an outlet to plug it in. 26% of the world does not have that opportunity. Only 26% of the world has the opportunity to reach in and plug in their phone whenever they want. India is China about 15 years ago. Both of these countries have middle-class populations that are growing by millions of people each month. And power generation in those and other Asian countries is going to grow tremendously in the next 20 to 25 years. So we blend custom fuels to our client specifications, and we're not out buying and blending large amounts of stuff so we can turn around and hope to sell it. We don't start procuring materials until we have a contract and we know when it's going to be delivered. We buy and sell according to a Platts index. Platts is a U.S. company that determines oil prices around the world. So we buy at a discount to that, sell at a premium to that. And what this means is our margins are going to float up and down with the oil price, but we're still going to make a profit no matter, well, I won't say no matter where it is, but we still make a profit on every buy and sell. Everything we do that's proprietary will be blended at our pre-fueling facility about 60 miles north of here in Leggett, Texas, which is about 60 miles north of Houston. This material is put on rail cars, sent to shore tanks in the Gulf Coast, and then mixed with straight runs and distillates that we procure from refineries, and then we put that on ships and load it out to barges or ships that go out to our customers. How do we get clients? In this industry, relationships are everything. We get introduced to potential clients by clients. When you provide a good product, word of mouth advertising is key. And the old adage, it's not what you know, but who you know, is very helpful in our industry. Like I said, relationships are very important. And we're lucky enough that we have a good product, that we get contacted by companies wanting our product all the time. We probably get calls 2-3 times a month wanting us to deliver to new clients. Okay, with this slide, you can see that you can't see it, but we bobbed along at about $4 to $6 million for the first 4 years, from 2012 to about 2015. And in 2016, we knew that we were going to need more capital to help grow ourselves. We needed logistical infrastructure needed to grow, so we started this capital raise. With this and some other events, the company was able to break the revenue ceiling in 2016 with almost $20 million in revenues. In 2017, we had over $90 million in revenue. And you can see by that slide, we kept advancing through 18. We finished 85% higher in revenue, and profits were more than double than last year. And we expect to double last year's numbers again this year with the new cargoes we're expecting to go into Panama and Asia by the end of the year. So we've averaged delivering about 175,000 barrels of fuel per month to our customers. When we start shipping into Panama later this year, that'll be an additional 300,000 barrels per month. And when we start shipping into Asia, those shipments will be about 600,000 barrels per month. So you can see whenever we get a bigger delivery, it's huge. And the growth that you'll see on these slides over the next couple of months, the Asia's shipments to Panama, the next couple of months in Asia later, eventually these shipments into Asia will be over 2 million barrels per month. that our customers have been looking for the past probably year and a half. So it's important to notice that these numbers are all based on, are all based on customers that we have in hand right now, and it's not something that we are hoping to get customers for later. People ask us, who's our competition? We've got smaller companies that are highly fragmented. They can't really secure large-scale shipping that they need. They don't have the creative blending expertise that we have, and they can't get kickstarted in the market. And then the bigger guys, their whole business plan is based on millions of barrels of fuel a month. So they don't have the capacity to help the middle guys. That's our market. Our market is the middle market customers. That's who we'll be catering to. And that middle market is huge. So you'll see there that the projected growth of our company is based on the current capital and sales right now. Our revenues for 2018 exceeded projections, and we hit 172.5 million in revenue, and our EBITDA was 13.07, which was it's always nice when you beat expectations. Currently, we are raising $50 million in equity capital. We currently have about 15 million of that, combined with some debt. That money will be primarily spent on midstream assets, probably some logistical assets, maybe small amount for working capital to shore up company infrastructure. But those are the locations and the facilities that we are looking to obtain now, which will help us grow into the future. And if we were to close this raise tomorrow, this is what the next couple of years would look like. And again, all these numbers that are on this page are based on letters of intent and contracts we currently hold today. And all the numbers we've figured have been based on $55 a gallon oil. Okay, so what's in it for our investors? As Brittany said earlier, private equity is big for us. And private equity's arrived as a major component in the alternative investment universe, and now it's broadly accepted as an established asset class in many institutional portfolios. Many investors have previously avoided private equity are now either expanding or creating new equity programs. And this is because of the historical outperformance of everything else. Long-term returns in private equity represents a premium to the performance that were in public equity. I'm running away. And this has been the case in U.S. and Europe for years. So you'll notice that high net worth, ultra high net worth pension fund managers, they're all allocating a significant portion of their portfolios into the high upside alternative investments. And many thought leaders in the investment world are advising people they should have 10 to 20% of their portfolios invested in the same way. So if private equity is outperforming all the other asset classes, then SGR Energy has exactly the kind of investment opportunity you should be paying attention to. So as mentioned before, let me get this back set. Our company is paying a 12% annual dividend, and that's paid out at 3% per quarter. So if you reinvest your dividend, you're actually getting about 12.5%. Shareholders are getting increased equity while the company grows. When we started the raise in 2016, shares started at 75 cents. Now they're $1.91. The most exciting part of all this is the IPO. We're going to skip this and go back with what's going on here. Let's get back on our slides. So with the private equity, they say you need 10 to 20% of your portfolio in alternative. So if we take 10% of a $500,000 portfolio, you invest $50,000 and take the 12% dividend for 2 years, that's 24% after that. Right now, if you invested $50,000 in SGR Energy, you'd have 26,179 shares. Now it stops. projected share price when we go public in a few years is projected to be about $17 a share.
Bart, if you'd like, I can take the controls for you.
You want to take control, yeah. Yeah.
Okay. Oh, wait. What? Here, let's try that.
Okay. So you just...
Here we go. All right. Okay. Is this what you wanted to show, Bart?
Go back.
Did you want to go back from here? Okay.
Yeah. One slide or two. One more. Okay. Keep coming forward. So the IPO prices we're projecting.
Just having technical difficulties.
Technical answer.
Okay, go ahead.
Okay, so 26,179 shares projected IPO. It came out to, I believe it said $445,000. If you reinvested your dividend, it'd be closer to $580,000.
I think what's happening is it's on like a looped animation, so I have no control over. Yeah.
Okay.
Go ahead. Sorry.
So if you invested, so you take your investment, and along with the dividends you reinvest, you're either going to get $445,000 roughly, or $563,000 if you reinvest your dividends. So the remaining portion of your investment, the $450,000 that you left in your portfolio, if it's growing at a traditional growth rate, you've gone up from $450,000 to $496,000. So with a 10% investment in SGR, you've got more in that time frame than you did with you raised with your traditional investment. Basically what we come down to is, I think that's our last slide. Oh yeah, no we don't. So the investment in SGR will, if everything goes well, should as well as it's planned, will do a lot better than your other investments. So basically what the next question is why do you invest? I know a lot of people dream of being free from the day-to-day job where they work for the money instead of the money working for them. But in actuality, in my case, and a lot of people's cases, I want to leave money for my kids, my family, so they can continue doing what I want them to do. So there's a generational impact for children and grandchildren, and that's the mindset that our CEO, Tommy San Miguel, has, and me, and so many others that invested what we have invested in this company. So I will leave you with, I hope you have gotten something out of this, and anybody has interest in investing and earning a great dividend and growing with us, we'd love to have you. Brittany?
Thanks, Bart. Okay, we are going to try to make a change here.
Switch over
on the screen. It's just been one of those days. I don't know. I'm sure everybody understands how that goes. Are you able to see my screen okay now?
Yes.
Okay, great. Thanks. Okay, so thank you, Bart. That was very informational. Actually, I learned a lot about that as well. Very interesting industry, and as Bart mentioned, just interesting to look at alternative investments, whether you're using personal funds or retirement funds. There's a lot of activity in that space, and there's a lot to learn in that space. And you don't have to know everything, but you just have to know enough to be strategic. So with that said, I'm just going to spend maybe 20 minutes talking about how to utilize this as a strategy for retirement planning. So using self-directed IRAs for energy sector investments. I'm going to just quickly brush on the role of Next Generation as it generally relates to self-directed IRAs. We are a custodian and administrator for retirement plans that are self-directed. So financial institution that basically holds the plans, provides reporting and record keeping, and then also processes investment transactions according to direction that we receive from our account holders. And our goal is really to educate investors. So a little bit of background on the company. Our CEO, Jamie Raskulnik, was part of a national network of self-directed IRA firms self-directed IRA administrators prior to breaking off and starting her own business in 2004, which was Next Generation. And she actually has a real estate background. She's a longtime real estate investor. She worked full-time in the real estate industry, and that's kind of how she got into this business, wanting to put these investments into her IRA. But obviously, as you know, there are a lot of other ways to invest using self-directed IRAs and other funds as well. But she has been in the business for quite some time. And as you can see here, we collaborate with Forbes. She's won several awards for entrepreneurship, and we are a women-owned business in New Jersey. So the only disclaimer I have here as far as what we don't do, and this is important because I think people are used to having advisors when they have a retirement plan, is that we are not fiduciaries. We're not financial advisors. With self-directed plans, it's basically assumes that you are choosing your own investments and doing your own due diligence. So when we do review investments prior to processing a transaction as far as purchase or sale or any sort of deposits into an IRA or sending funds out of an IRA or retirement plan, we're looking from an IRS regulation or IRS compliance standpoint, but not reviewing the legitimacy of an investment. We are reviewing to ensure the asset is feasible for us to hold as a custodian, but we're not reviewing for legality. So it is important that you do understand that you should be comfortable with the types of investments that you're looking at, and you may want to consult other resources, but generally speaking, we're not advisors, but we do provide a lot of education on this topic. So self-directed IRAs are basically like any other retirement plans you might have, but the biggest difference is what you're allowed to invest in. So it just opens up your world outside of traditional stocks, bonds, and mutual funds to include other types of non-publicly traded assets. So the advantage of that is if you're already investing in these types of things with your personal funds and you didn't know you could use a retirement plan, that's great because now you know you can. And rather than having to pay income tax on the investment earnings, you can have them come in tax advantaged, tax deferred or tax free, depending on what type of IRA you're using. And then of course, if you're investing in things that you know and understand, or you're diversifying beyond stocks, bonds, and mutual funds, or outside the stock market, which has proven to be volatile lately, then you are, hedging against that volatility, and you're able to have a little bit more control over the return on your investment. And I think I heard something that was over 10% as far as what SGR is doing, but that's just an example. And with a lot of alternative investments, we know people are looking at double-digit returns, which right now are hard to find if you have a portfolio that's exclusively invested into publicly traded assets. I know that mine is not returning me 10 to 12%. I would love if it were. So types of plans that you can self-direct are traditional tax-deferred IRAs, which dollars go in pre-tax, and then you pay income tax when you withdraw the funds later in life after retirement, after age 59 and a half, at which you don't owe an early 10% penalty. A Roth IRA, which is just the opposite of that. When you put money into a Roth, which is quite a magical tool, the funds are taxable at that time. They're not tax deductible when you put money into Roth IRA, but the beauty of that is that they grow tax-free. So the investment earnings are basically tax-free as long as you've had a Roth IRA for 5 years and you're taking the funds out after age 59 and a half. You're not paying tax on any of your withdrawals, and you don't have required minimum distributions. SEPs and Simples and employer-qualified plans are designed for business owners, and they typically have higher contribution limits, being that you can put more money out of your own pocket on an annual basis into these IRAs to contribute value to them, and it's usually tied to the money you're making from a business that you own. And then the less commonly known but also available are covered ESAs focused on helping you to save for child education expenses, which also are withdrawable tax-free, and then health savings accounts, which are designed for saving for medical expenses that also have tax benefits, and you can self-direct those as well. So options for putting funds into an account include contribution, which I just mentioned, transfer from a similar account if it's held with another financial institution, like let's say you open a self-directed IRA with Next Generation and you have an IRA already in a brokerage at Fidelity, and you wanted to take some of those funds and move them into a self-directed account, you could. You would just need to liquidate whatever portion of the funds you want to move over. It would be a simple trustee-to-trustee transfer, and it's a non-taxable, non-reportable event. So that's relatively easy. As well, if you have an old employer 401k or other type of employer plan like a 457 or 403b, and you're no longer working for them, you can typically roll that over into an IRA. So that's a process you initiate on your end, but it's also relatively straightforward. And then the conversion would be if you were just going to move funds from a traditional IRA, for example, to a Roth. It's a taxable event, but obviously once you move it into a Roth, it grows tax-free from there. So you have all those options available to you, and it's completely up to you what you'd like to do. As far as possible investments, the world is kind of your oyster. We just talked about energy, and then there are a ton of other asset classes as well and other types of things that we can hold with IRAs. The IRS allows pretty much anything except 2 restrictions. They more so tell you what you can't do than what you can, which makes it somewhat frustrating sometimes, but I guess they're clear about what's not allowed, so that's good to know and important to understand. So the 2 restrictions are life insurance and then collectibles. We also have antiques, but that kind of falls into the same category. So any of those things related to collectibles or antiques, you can't hold in an IRA, and you can't hold life insurance in an IRA. You can only hold that in a trust, which is structured a little bit differently. So as long as what you're looking to invest in doesn't fall into these categories, you're pretty much good to continue exploring that option. As far as how a self-directed IRA or retirement plan is held, you should have 2 components. One is a custodian, and one is an administrator. The custodian holds the plan, holds title to the assets for you, and is a regulated entity, and is required to report to the IRS certain information about your account and is regularly audited. And then the administrator provides your customer service, and then they would be the ones processing transactions, purchases, sales, things of that sort that you're communicating about with them. So Next Generation has both of the components in-house. Sometimes you have to, if you're looking to have a self-directed IRA, you're having to work with an administrator, but they don't have the custodial capabilities in-house, and they have to rely on an outside custodian to do that. Being a custodian it's no easy feat to earn that status. You have to go through rigorous processes to be approved, to be able to custody assets. So the trust company, Next Generation Trust Company, we earned our trust charter 2 years ago, and we're chartered in South Dakota. The banking commission there regulates us, and that means that we can hold account in any for clients who live in any state or essentially any country in the world, as long as they have U.S. earned income and a tax ID. So the South Dakota Banking Commission just has favorable statutes as it relates to self-directed IRAs, and they're the most flexible. So you'll typically notice that most companies will be chartered in the state of South Dakota. But all these services are under the Next Generation umbrella. So if you call related to an account, you're talking to somebody with Next Generation Services, and that is located in New Jersey. So some ways you can invest. We talked about private placements, as far as investing into something like what Bart described and private equity. There are also options to directly purchase properties in the name of your IRA, to partner into a purchase, which I think for today's purposes wouldn't probably be necessary. You can buy notes and you can loan with an IRA, which again isn't relevant for today, but just wanted to make sure everyone has this information. But lastly, purchasing shares or units of stock, or investing as a limited partner in an organization that's more relevant to what we're describing. For energy investments, your investment would be considered a private placement. So let's get into some of the restrictions. This is just important to understand. And the IRS basically outlines a list of what they consider disqualified persons from an IRA, meaning that if your IRA is going to invest with people or entities, they can't be considered disqualified persons. So you see here the main list. IRA holder, which would mean if you're looking at your own IRA, you yourself are disqualified from investing with it. So I'm going to talk about some of the examples of what these prohibited transactions might look like, but spouse would be another disqualified person. You're going to see they're mostly family members, A sentence, B sentence, and their spouses. And then any fiduciaries, meaning if you had a financial advisor on your account, on your self-directed IRA that's advising you on the investments you're doing, any entities or businesses majority owned by these people, yourself, your spouse, your family, etc., 50% or more ownership would also be considered disqualified, not allowed. Business partners, and then other people providing service to the account, which might be a custodian, for example. So some examples of prohibited transactions. There are three main types defined by the Internal Revenue Code. When an IRA engages in a direct transaction with a disqualified person, which would be selling something to, buying something from, any of the disqualified people or entities we just discussed. Extending credit, which would mean lending, and when you're talking about private placements, you're not really going to come into this as much when it relates to energy and other industries. This is mostly related to real estate when people need to leverage property. But if you were going to leverage property or something of that sort using an IRA, you can't personally guarantee any loans. So you can't leverage your personal collateral or credit or anything of that sort to benefit your IRA's investment. So that's important to understand. If you do take a loan using an IRA, it has to be non-recourse. And it's not really relevant for tonight's discussion, but if anybody has questions about that, I'm happy to chat later. And self-dealing, which is more a gray area, but I'm going to talk about some specific examples in a moment. But if your IRA invests and then you as the owner or any other person that is considered a disqualified person has like a personal benefit from that as well, like a double benefit, it's considered self-dealing and basically leveraging your IRA to invest into something to just really ultimately benefit yourself, and that's not really what we're talking about here. So remember, at the end of the day, when you use an IRA to make investments, you're investing for the long run, and you're investing for your future, and you're not planning to take the funds out until you're hopefully after the age at which you would incur a penalty, and you're ready to retire and live on these funds without working. So that's really the idea behind this. So you want to keep that in mind. The consequences of a prohibited transaction are pretty severe. The IRA becomes distributed to the owner personally, and then applicable penalties and taxes would apply. So you really do want to make sure you don't do any of these things, and that's what custodians are here for in terms of educating people to make sure that they don't get into these situations. So some specific restrictions, if you are doing a private placement, private equity type investment, would be, as I just mentioned, making sure you're focused on investment purposes only. You're not personally benefiting from whatever products are owned by your IRA. So even if it's investing in energy and oil, you don't want to be getting some sort of personal compensation for those investments. You don't want to let any disqualified people, those family members, yourself, entities majority owned by family, alter the products that your IRA owns. And in most cases, it probably wouldn't be with energy, but you just want to make sure that you do know this. You don't want to, let's say you already invested and you purchased, let's say you purchased shares personally in a fund or a private company, and you now 6 months later you want to take your IRA and you also want to invest. That's okay. Oops, sorry about that. That's okay, but you do want to make sure that if your IRA is coming after the fact, that you're purchasing new shares and that they're not shares that are going to basically, by purchasing them, alter your personal ownership. So you want to keep all those things kind of separate. And then, of course, you don't want to sell shares to any disqualified people if you purchase them with your IRA. And then, again, if you're investing into an organization or an entity, you don't want to, you can't invest into one in which you're already a key decision maker and your IRA purchases an ownership interest. So you want to just avoid those conflicts of interest. So next steps and timeline, basically, if you wanted to do something like this, you would set up a new IRA by completing an application, which takes 1 to 2 business days once it's completed and submitted. You can either mail in originally completed forms by hand, or you can electronically complete and then DocuSign them. And then the second step, would be to fund the account via one of the methods I described: a contribution, a transfer, a rollover, or a conversion. You can actually do multiples of those. So once you do that, you'd have to obviously be working with your current custodian, wherever the funds are coming from, to release them and send them to NextGen or some other custodian that you're moving to. So that process, the timeline for that can range from anywhere from 1 to 6 weeks, just because, again, the variable we don't have control over is the other custodian's willingness to give up your funds, unfortunately, and their processes vary as well in terms of what they require to do that. But once that is completed, and we will help work with you to facilitate that, the last step is making an investment, which really essentially should take anywhere from 2 to 5 business days once you've completed the paperwork. And I'm going to talk about right after this what paperwork is required to do a private placement. But basically what you need to do, if you're a self-directed IRA holder, your job is to direct your custodian. So you're not personally taking receipt of the funds, but your job is to say, hey, I'm going to be strategic. I want to invest in this fund, and I want you to take my money out of my IRA, and I want you to put it in the fund. And then you're going to basically tell your custodian, once they've done that, when you're ready to get out of the investment. So you literally call every single shot, and all the custodian does is take your orders and report and document everything that's done. So the beauty of it is you call all the shots. The downside is they're not advising you on what to do. So you do want to be comfortable with what you're doing. So once that's completed, the custodian and administrator will do, and what we do as well, is an administrative review of all the investment documents prior to processing anything. So although you have to call all the shots, we're still taking a look at the paperwork to make sure that things are labeled appropriately. It's something that we can hold as a custodian, and that there aren't red flags, and we don't see a risk of a prohibited transaction. Because if we do, we're not going to be able to process that, and we're not going to be able to hold it. So we are going to let you know if we see something that does present a risk. So here's an example of the investment documents that we would be required for you to send over if you wanted to do a private placement into energy or some sort of alternative investment of this structure. So internal forms on the left would be the bidirection letter, which is just basically information regarding the IRA account holder, which would be yourself, any additional contact information if there's somebody else we should be working with, and a description of the asset to be purchased, and that would be signed by you as the account holder. And then the private placement instruction letter would include name of the manager of the entity and the EIN of the entity, outlining the vesting and other important requirements, also signed by you, the account holder. And then there's a private placement advisory notice, which would notify the entity manager that an IRA is investing, and it outlines reporting requirements. So that needs to be signed by a signatory of that entity or that fund or company, so that they acknowledge, okay, I understand an IRA is going to be investing, and I know what my responsibilities are, and I know what that means. And then supporting documents would include an operating agreement for that entity, a private placement memorandum or subscription application or agreement that would be completed just as if you were going to do it with your personal funds, but obviously we're signing in the name of the IRA here. And then a share certificate if applicable, with shares titled to the IRA. Again, just remember that everything has to be titled to the IRA because we're talking about a retirement account and not your personal funds. And for tax purposes, that has to be distinguished very clearly. And that is what we do and what we look for before processing these transactions. So just lastly, how funds flow here. So as an example, as the account owner, you set up your self-directed plan, which is the green bubble, with your custodian administrator, which is the gray bubble, and then you identify an investment that you're interested in. You then reach out to your custodian. You say, hey, I want you to go into my account, take my funds, send them to this entity. We do that. So you're removed from the situation, but you're still making decisions related to your investment. And then when that investment yields some sort of earnings, they go directly back into the plan. They do not go back to your personal accounts or personal receipt. So in the case of what Bart described, as an IRA holder, you would have the option to take quarterly dividends, or you could reinvest your earnings back into the fund. So you would just decide what you want to do, and you would just tell us. And so we would comply with that direction. And then you would just want to remember that all the investment flow comes out of the IRA and back into the IRA. And that helps preserve the tax advantage status of the investment. So that's pretty much it. I kind of sped through that because I know some of you have heard this already, but I did want to make sure we gave Bart enough time to go over his piece. And I just wanted to quickly reference that there is a handout right now on the panel you can download related to self-directed IRAs. It's just frequently asked questions type of brochure. And for those of you who are newer to the topic or just haven't gotten that information yet, you can click on that and you can load it right now. I also wanted to let you know, if you do have questions about prohibited transactions or anything like that, we do have published white papers. You can subscribe to receive the white papers when they're available. We usually just publish them quarterly, so you would only get an email when, you know, a new one is published, but at least you would have that information. We have a blog online as well, and you can email newaccounts@nextgenerationtrust.com with any questions about opening an account. That would go directly to myself and my team. So we would handle any questions, and we would immediately call you or email you if you prefer, related to having a one-on-one conversation. You can call the office as well. We don't have any phone prompts. So when you call the office, a live person picks up and you can talk to somebody about what you really need and get connected to the right person pretty quickly. We're on all social media channels as well, so you can follow along with whatever's going on. So if you're not quite ready to make a decision, you want more information, depending where you are in the process, there are a lot of options for you to get educated. Just take advantage of the resources available to you. So I'll end with that, and we'll see if we have any questions here. Okay, I don't see any. I'm going to give the people that are currently on a moment to submit any if they do come up. Let's see. I know we only have a couple minutes left. You still with me, Bart?
Yes, ma'am.
Okay, great. All right. I don't see any. I'm going to assume at this point we don't have any questions. I know we covered a lot, and I know that usually after these conversations, people need time to digest everything, so that's perfectly fine. So what we're going to do is we're going to wrap it up. Unless, Bart, do you have any closing comments or anything that you'd like to add before we wrap it up?
Not that I can think of. Just thanks for the opportunity. It's been great. And hopefully the people that are listening got some information, both from you and from me.
Yeah, I know for sure they got new information from you. So we do appreciate that. All right, so we're going to wrap it up just about right on time, and we appreciate everyone's time tonight. Again, recording will be distributed to everybody, so if you need to reference this in the future or you weren't able to make it on tonight, you will be able to hear this. You will have access to the handout. Please do feel free to reach out to us with any questions and your feedback. We really appreciate it and hope everyone has a wonderful night. Thanks so much. And thank you, Bart.
Thank you, Brittany. Thanks, everybody.
Take care. Good night.
Bye.